You're watching Daily Market Pulse. Today is Friday, April 24, 2026. If you want a clean daily read on macro and market risk, subscribe for the next briefing. Geopolitical risk is driving everything today as oil hits $96, inflation reaccelerates to 3%, and the ECB prepares to hold rates while Bitcoin consolidates below key breakout levels. Here is the framework for today's briefing. Geopolitical risk and central banks. ECB hold expected, Fed path complicated by sticky inflation. Energy markets, oil at $96 despite temporary Iran ceasefire. Equity and bond markets, stocks pull back from highs, yields firm at 4.33%. Bitcoin and crypto, BTC consolidating below $79 breakout zone. Week ahead, ECB meeting and ongoing geopolitical developments. Daily financial market update, live prices, gold, silver, crypto, equities, US bonds, and trend. Geopolitical risk is driving everything today. Markets are dominated by geopolitical risk as Middle East tensions persist. The ECB is expected to hold rates on April 30th, with economists leaning toward a possible June hike. U.S. inflation has reaccelerated from 2.4% in February to 3.3% in March, complicating the Fed's policy path. This creates a complex environment where central banks must balance geopolitical uncertainty with persistent inflation pressures. The energy shock from Middle East tensions is directly feeding into inflation expectations, forcing policymakers to remain more hawkish than previously anticipated. Risk appetite improved slightly on reports of a temporary U.S.-Iran ceasefire and Strait of Hormuz reopening, but traders are still pricing in significant energy risk premiums across asset classes. What to watch next? Focus on the April 30th ECB meeting for policy signals and any escalation or de-escalation in Middle East tensions that could shift energy prices and inflation expectations. Oil is the key driver here. WTI crude is trading at $96.45, up 0.63%, holding elevated levels despite reports of a temporary U.S.-Iran ceasefire and Strait of Hormuz reopening. Oil prices at these levels directly feed into inflation pressures and complicate central bank policy decisions. The market is pricing in ongoing supply disruption risk from the Middle East, even with temporary diplomatic progress. Energy stocks are outperforming, while the broader market remains cautious about the inflationary impact of sustained high oil prices on corporate margins and consumer spending. What to watch next? Monitor any developments in Middle East tensions, ceasefire sustainability, and whether oil prices can hold above $90 or begin to retreat on diplomatic progress. Let's look at traditional markets. U.S. equities pulled back from recent record highs, with the Nasdaq leading declines at -0.9%. S&P 500 down 0.4%, and Dow down 0.4%. The 10-year Treasury yield is holding firm at 4.33%, with the dollar stable at 98.86. The pullback in growth and software names reflects concern about higher-for-longer interest rates and the impact on valuations. Firm Treasury yields suggest the market isn't convinced inflation risks have fully rolled over. Software and growth stocks are leading the pullback, while defensive sectors show relative resilience. The dollar's stability reflects balanced risk sentiment rather than flight to quality flows. What to watch next? Watch whether the 10-year yield breaks above 4.5%, which could accelerate equity outflows, and monitor if the pullback in growth stocks extends or finds support at current levels. Now for Bitcoin and crypto markets. Bitcoin is trading at $77,700, down 0.4%, with total crypto market cap near $2.68, down 0.23% over 24 hours. The Fear and Greed Index sits at 39, indicating fear territory, while Bitcoin dominance rose to 58.1%. Bitcoin is consolidating just below key resistance at $79,000, a level that could determine near-term direction. Rising dominance suggests capital rotation toward relative safety within crypto rather than full asset class exit. Ethereum is underperforming at $2,307, down 1.9%, while altcoin participation remains subdued. Trading volume dropped 15.9%, indicating lower conviction in the current price action. What to watch next? Monitor whether Bitcoin can break cleanly above $79,000 for a potential move toward $82,000, or if it fails and tests support around $75,000. Also watch Bitcoin ETF flow data for institutional sentiment. Here's what matters next week. Next week focuses on the April 30th ECB meeting, continued geopolitical monitoring in the Middle East, corporate earnings continuation, and ongoing Bitcoin ETF flow monitoring, plus U.S. crypto market structure legislative developments. The ECB meeting could provide crucial policy guidance amid inflation and geopolitical uncertainty. Middle East developments will continue driving energy prices and risk sentiment. Crypto policy attention is rising around U.S. market structure legislation. Markets will be positioning ahead of the ECB decision, with particular focus on any hawkish surprises given the inflation backdrop. Crypto markets are showing renewed sensitivity to regulatory developments. What to watch next? ECB policy signals, any escalation or de-escalation in Middle East tensions, continued inflation data releases, and progress on U.S. crypto legislation that could impact institutional adoption. Now let us turn to today's live market snapshot, where gold, crypto, stocks, and bonds are actually trading right now. Now for our daily financial market update. Here is where the key asset classes stand as of Friday, April 24, 2026. Gold is trading at $4,712.60, lower on the day and is lower over the past 5 sessions. Silver is at $75.68, sharply lower today with a 5-day trend of -5.3%. In crypto, Bitcoin is at $78,150, strongly higher on the session and strongly higher over the past week. Ethereum is at $2,323, slightly higher today. Other major crypto, Solana at $86.23, BNB at $638.06, XRP at $4,346. On equities, the S&P 500 at 7,108.40, slightly higher. The Nasdaq at 24,438.50 higher. The Dow at 49,310.32 higher. Internationally, the DAX at 24,152.23 lower. The Nikkei at 59,716.18 higher. The FTSE at 10,412.51 lower. On the bond side, the 10-year U.S. Treasury yield is at 4.31% higher on the session, and the 30-year yield is at 4.91%. Slightly higher. Yields remain in focus as the market watches for Federal Reserve signals. Rounding out the macro picture, WTI crude at $95.85 per barrel, strongly higher. The dollar index at 98.63, slightly higher. The overall tone is risk-on. Equities and crypto are both bid, suggesting investors are positioned for continued upside in the near term. So what's the takeaway from today's market action? Geopolitical risk is driving the narrative across all asset classes. Oil at $96 is keeping inflation pressures elevated, forcing central banks into a more cautious stance. The ECB is likely to hold in April, but may hike in June. Bitcoin is consolidating below key resistance at $79,000, while traditional risk assets show hesitation. The temporary Iran ceasefire provided some relief, but traders are still pricing in energy risk premiums. Next week's ECB meeting and ongoing inflation data will be critical for market direction. Thank you for your attention, and we will see you again tomorrow.